All right, welcome everyone. This is Bob Maurer. It is Thursday, the 8th of May, around about almost 4 o'clock my time. We normally do an update of the current seasonal future spread strategies, but as of a couple weeks ago, everything had been taken off the board because we got flat on three positions we had, either taking modest gains or hitting the stops, especially in the livestock sector where we were short those spreads and the market popped on up and hit those stop levels. So what I'm going to do in this one is just briefly introduce a handful of new strategies that started recently, and we'll take a look at those. And then I'll also be publishing some deeper dives into each one of those so you can get the backstory and determine what you want to do from there. So let's hop over to it, dial into the portal. You'll see the most current PDF version right here. So that's for this week, May 4. And this is what we have. So these are all new strategies. Strategy numbers 354 through 358. This should be 358 right here. And we've got a bear spread in soybeans, bear spread soy meal. So these two could act similarly because soy meal is a derivative of soybeans with the crush. So bear that in mind. If you're looking for diversification, you might want to look one off. Anyway, if you want to do both, that's up to you. 356 bear spread in natty gas. 357 bull spread in live cattle. And then 357 we have a bear spread in coffee. All right, or 358 that is. That'll be 358 a bear spread in coffee. Okay, so let's look over here into the charts. We'll look at them one by one. Again, I'm not going to do a deep dive, just kind of go over the bigger strategy, and then you can look into more detail when I post the deeper dives into each one of these. All right, so first things first, this is the bear spread in soybeans, number 354, long Novi, short September. So these are both within the same marketing year. Margin requirement reasonable here, just a little less than $300. Risk reward profile here. And we are looking to get short. How are we looking to do it? Well, our first entry level is even money right here. Second entry level will be 5 cents over, so plus 5. And then our targets are down here at -6 and -7. So we're looking to get short. Market generally has been in a trading range. We want it to stay in that range. We'll call it anywhere from about -4 cents up to +1, so about a nickel range. And we just want this thing to push higher and then break down pretty quickly. So it's got about a 8-week window of opportunity here for the seasonal. All right, so that's strategy number 354, the bear spread in soybeans. Next up, soy meal. So when you crush a soybean, you get two things. One, you get soy meal, and the other thing you get is bean oil. So this will be a derivative of soybeans, and similarly, we're looking to get short. So our two entry levels are pretty close to each other, -$2 and -170. So we need to see a rally up here, and then a break, and then the target is down here at -42. With the stop up here at -12. All right, so market's been pushing down, but of late more sideways. We want to stay within that range. Go ahead, retest the highs, and then break on down to that target of -42. Obviously, out of the gate here, we've already seen a pretty good push to the downside, so I'm going to stick with this for now because we're just into the seasonal window. But it may very well be that this thing pushes down to -42, and I just need to cancel the whole thing prior to it letting us on board up top here. So that's 355 bear spread in soy meal, long December, short October. Long December, short October. Again, same marketing year. Next up is actually natty gas. So in yellow here, strategy number 356, bear spread natty gas, long March 2026, short the Jan. Margin requirement just shy of $1,000. Here's your risk reward profile in terms of dollars. We are going with the trend here, looking for a bounce. So we've seen a pretty good move to the downside since about mid-March, all the way up to about a couple weeks ago. Getting a bit of a bounce right now, so we just want this thing to have a little bit of a recovery bounce and then fail back in the direction of the trend. Our entry levels are 896 and 957. Stop is at 1,000. And then our two targets are down here below. So big rally into about mid-March, pretty good break into about late April. Now we're seeing a bit of a bounce. We just want this thing to fall back in the direction of the trend recently, which is lower. So that is strategy number 356. And it started on the April 30th going through June 14th, so roughly about a 6-week window there. So that is strategy number 356, bear spread in natty gas. Then we've got a bull spread in livestock. And this is strategy number 357. Long August, short October. Margin requirement 550. Here's your reward profile. Only one exit on this one. And one target, that is. We're looking to buy a break and then have it resume in the direction of the trend, which is up. The entry levels are positive 150, positive 70, stop here at negative 30, and the target will be 360. So we need to see this thing dip, hold, and then rally back up in the direction of the trend. As you can see, ever since about early March, we had a pretty significant rally into early April, a bit of a break. Now we've got a resumption of the uptrend, so we want to see a bit of a break and then another resumption of the uptrend. So not a ton of time left in this one. It goes till May 19th, so that's 11 calendar days, roughly, give or take 7 or 8 trading days. So we'll need it to break pretty soon, hold, and then push on up. Otherwise, we might be looking this one off, or it may just rally right to the target and we wouldn't be on board. All right, strategy 357, bull spread in live cattle. Brief introduction there. Then we've got, last but not least, the bear spread in coffee. Now, coffee's volatile, and you're going to see it in the margin requirements. So this is strategy number 358. And it's long September, short July. Margin requirement just shy of $1,300, so that's indicative of the volatility, right? Higher than the ones we just looked at with the cattle at 550 and then the others at 2 and change for the margin requirement. Here's your risk reward profile. It's pretty good. And then here's our approach. So we're looking to sell a bounce, selling a deeper bounce, let's put it that way. And then we want this thing to break. So we're looking to get short. Entry levels are at 915 and 1015. Stop is at 1200. And then our targets are 470 and 325. Markets had a significant rally from November up until mid-February, and then a significant break from then up until about a month ago on April 7, where it dipped down to 300. So it rallied 1,300 points or so. That's 13 cents. And then it broke about the same. So pretty big loop-de-loop, shall we say. Market of late has been down. We're seeing a bounce, and we want that to continue. So we're trying to go trend following recently, and we need this thing to push up before it breaks on down. So again, target level 470 and 325. We've already started to move lower, so we'll see how this plays out. Perhaps we don't get on board. The strategy is pretty short time window. May 1 was the start date. May 26 is the exit date. So only 25 calendar days. Subtract the holidays and such, and you've got about 19 trading days. So that's a brief introduction of the bear spread in coffee. And bear in mind, it is a volatile market. So when you see these margin requirements up towards anywhere from $1,000 to $2,000, pretty much the exchange is telling you that the expectation is for a relatively volatile type of move with these markets, or at least it's possible. So bear that in mind. If that doesn't suit your style, then I would look this one off. All right, so that's strategy 358, bear spread in coffee. All right, so 5 new strategies. Again, this is just a real quick, brief introduction. We've got 4 bear spreads, 1 bull spread. We'll see how things play out. If there's any changes to these, I will let you know. All right, I'm going to leave it there. If you have any questions, comments, anything of interest, feel free to let me know. And thanks so much for watching.